Welcome all crypto investors to this week's conversation on the hottest trends. Let's dig into the charts for the latest developments in search for massive gains. So smash the like button and subscribe to grow our network into the greatest crypto trading channel. Now, on to the show. Let's dig into the S&P Crypto Broad Digital Market Index. This is just an index over the top 250 tokens and coins in the ecosystem. Again, monitored by the S&P Dow Jones indices. So let's dig into the charts here. As you can see, I'm getting it straight off the S&P website. Like I always do, where I get my data, I go straight to the source. As you can see here, the last year we haven't really done that well compared to the S&P 500. We started off the year from now pretty much neck and neck. Traded sideways. We had a few points that were doing really well. We did really well in the early before we had that big summer slump. Mind you, we did horrible. The broad market did compared to the S&P 500, right? And we're looking at the S&P 500 and the S&P 500 growth. Okay, so again, and we've had that market top going back that I talk about every week from November, and we've recovered decently, not too much. We're still below the S&P 500 there as far as the indices are going. The 1 year we're looking at a negative 9.39%. The S&P 500 we're looking at 11% to be precise to you. So on that front, we're not looking too bad. I mean, if and again, you might be saying, well, price inflation, just general inflation is keeping the broad market index up and the S&P up. You couldn't be too wrong. If you look at inflation according to the government here, this is coming straight from the U.S. Labor of Statistics. Okay, inflation right now is we're looking at an official 7.5%. We haven't seen that. They said we haven't seen inflation that high going back 40 years, mind you, okay? And that's just what the government is going off of. Okay, I don't actually take the new accounting for inflation. I actually like shadowstats.com, John Williams. If we did the 1990s based criteria, inflation is over 10%. Mind you, let's read that again. Inflation is over 10%. And I beat this into everyone's head every week. If we go back to the 1980s accounting way, how they used to account for CPI, okay, 1980s base, we're actually at over 15%. So inflation right now is eating away. Okay, we're looking at almost double what the official government narrative is. Okay, not narrative, but what the government is accounting for. They're saying it's at 7.5%, and you'd have to be kind of naive to believe that inflation is only, like, if you can see here, 7.5%, which is already ridiculously high. So if this year, okay, if you're an investor and you're not getting at least 10 to 15% bare minimum return, you're just breaking even with inflation. Meaning you haven't even gained anything. So you really need to outgain inflation. We really need to be looking at at least 15, 20, 30% returns. This is like, how are you going to get that? You're only going to get that in either if you're in traditional financial assets, a very narrow portfolio, or you're in crypto. And I think I think crypto is the way to go. But anyways, this is the broad market index. As you can see, let me know in the comments below, what do you think going forward over this next quarter, as we're about to go into quarter number, are we? Yeah, no, we're still in quarter one, but we're about to go into quarter number 2 in June. So, January, February, March. Yeah, so March into April. Excuse me, I don't know why I said that. Into April. So again, what do you think the broad market's going to do when you look at the correlation with the S&P 500? Do you think that S&P is going to drop? Fed rates are going to go up. Inflation is going to skyrocket, and crypto is going to be decimated. What do you think is going to happen? Let me know in the comments below. Thank you for watching the show. Since you stayed, please smash the like button, subscribe, and share. Wherever you are, good day, good afternoon, and good night. Let's get those gains.